Hi everyone. So today Dom and I are going to be covering a new company called Cadence Design Systems. This is going to act as a stock analysis video we have not covered before. Dom is going to go into what they do, their earnings, and their market share, and then I'm going to cover the financials. So Dom, whenever you're ready.
All right. Let me know when you can see my screen.
Yeah, perfect.
Awesome. So Cadence is like they're in the electronic space essentially. They kind of have a little bit of their hand in both software and manufacturing. So their big thing is that what they do is their customers are like the chip makers, board makers for electronics, things like that. So on their own website, they kind of mentioned that they have over 30 years of software expertise, and that their customers are primarily doing stuff with all the computers and electronics. So I think they say hyperscale computing, 5G communications, automotive, mobile, aerospace, consumer, industrial, healthcare. So pretty much any major part of your life, and you're going to use electronics, and then those electronics have a very good chance of being using the Cadence software or the Cadence. Uh, I don't know how to say that their chip design for how the boards are made. Essentially, they have an input in how they are manufactured for the engineers to make it easier for them. They say.
Right.
So if I scroll down a smidge, I kind of give you like a little bit better of idea than kind of how I'm explaining it. So basically, all the electronics are made by somebody, and so those are the customers that Cadence has, and then they use their software. They call it Electronic Design Automation (EDA) on the computers, and that's what kind of helps not only the chips and processors and things talk to each other, but it also helps during the actual manufacturing process to know where parts are supposed to go, and then how they're supposed to be integrated with each other. And it's kind of like Cadence's bread and butter is what they're doing is the software and then a little bit of the chip manufacturing process. And so that's kind of how they work themselves into this space per se. Um, so just going to quickly go over market share for them. So they're one of essentially three main players in this EDA type market. So the first one's called Synopsys, and we used Google Gemini this time around because we couldn't find a website that specifically gave us all the information we're looking for offhand. So we did check these sources on the back end just to kind of make sure the numbers and things all made sense. Just to kind of a little caveat to it. But anyway, in general, so the one of their main competitors is Synopsys, when they hold roughly 35 to 40% of the core market. Art Cadence, who we're talking about, they hold about 40 to 48%, so just a smidge more, but roughly the same. And then the third player, who's just a little bit smaller, but still, in this space, is called Siemens, and they hold about 10 to 15% of the share for this type of thing. So pretty
Mhm.
interesting that there's only really kind of a few players that are like the biggest people around, and really more or less it's these two. Obviously, Siemens is still technically up there, but 10 to 15% versus 40 to 48 versus 35 to 40. I mean,
Right.
you're a smaller dog, in this fight, but you're still there. So that's kind of how the market share breaks down. So quickly going to go over the first quarter 2026 financial results. There's not too much that we kind of can get from this one, but there's enough where we can kind of just get an idea of what they are, what they're looking at. So revenue is at 1.474 billion and compared to 1.242 billion in Q1 of 2025. So did better than a year ago. GAAP operating margin 29.3% compared to 29.1% in Q1 of 2025. Non-GAAP operating margins 44.7% compared to 41.7% in Q1 2025. GAAP diluted net income per share is $1.23 compared to $1 in Q1 2025. Non-GAAP diluted net income per share is $1.96 compared to $1.57 in Q1 2025. And finally, quarter end backlog was 8 billion in revenue expected to be recognized next 12 months. Remaining performance obligations was 4 billion. So still pretty good. Year over year they are doing better from Q1 of 2025, which is great to see. Obviously, having a backlog of 8 billion, always good to see more money coming to them. So in terms of the quarter, I'd say good. Nothing too crazy, but again, this doesn't have like a lot of the expectations versus results. But just in terms of a year to date, I would say not too bad. So I'll switch over to Matt and kind of take a more look at their financials and see how they're doing, and we'll go from there.
Great. Thank you, Dom. Great job.
Thank you.
All right. So, like Dom was saying, they are a great company, and really the numbers are going to reflect that. So, but first, we're going to start off with where they are currently trading at, because I think that's extremely important. Uh, Dom, can you see my screen?
Yes.
Okay, so perfect. So we could see that right now they're $374 dollars a share, or 375. We could round up. They're a 52 high of 383 and a 52 low of 262. They've been on quite a rally this year, just because their numbers are fantastic. Like Dom was mentioning for Q1, I looked at Q4 before, also very good. They've been beating on top and bottom lines, but regardless, year to date they're up already 20%. Full year out, they're up 30%. So they are significantly higher, and they're currently number one and beating Synopsys in market share. They're the most valuable company within their market, their EDA market. So with that being said, we're going to take a look next at their net income, and their net income is, I would say, it's pretty good overall. You have 848 million 2022 in now 2026, Q1 2026 roughly. It's 1.1 billion. So not too much, but still pretty good, especially for a $100 billion company, which they've recently crossed over into that territory. So they are certainly bigger. When we take a look next at Simply Wall Street's going to say that free cash flow is 1.4 billion. Next 3 years, going to be 2.6 billion. So again, very profitable, very good. Nothing to really, no red flags here. Financial health of the company, we're going to see that you have to be a little bit cautious about. It has a lot of equity. Cash went significantly lower. Now debt is higher than the cash. Maybe that's, I don't think it mentioned buybacks, but that could be due to buybacks or some kind of merger. I believe, again, I don't think they mentioned anything, but yeah, it could be one of those things. Uh, Next thing we're going to take a look at is DCF. So the DCF is going to say it's overvalued by 49%. However, really, we look at it, when we look at Wall Street, it's going to say 56% overvalued. They've had quite a rally, so it doesn't make sense that they're overvalued right now. They're just pretty expensive, I would say, just in general. So you do have to be a little bit careful with them. And lastly, Tipranks. Tipranks is going to say it's 14 rating, strong buy, 12 buys, 2 holds, 1% up. Oh, excuse me, 2% upside. We'll round up. uh, Low of 275, an average of 381. And like, remember, keep in mind, I said the price is currently 375. So really not a lot of upside. They've already pretty much had a huge upside. They've already rallied significantly. They're beating the market currently. So yeah, no, I mean, nothing really to go by here. It just, yeah, they're just significantly pretty overvalued right now, but good company overall. Dom, is there anything else you wanted to add?
I don't think so. I think you did a pretty good job with this one. Nothing
Okay.
really else from my perspective.
All right. All right. Thank you, everyone. And thank you, Dom.
Thank you.